Hello, Warriors. Coach here at TradeGateHub.com. Who's ready to have a good week? Who's in the room? Okay, so I'm going to talk about a couple of things here today. One of them being the most important thing that is still a process that we all go through, and that's patience of waiting for things to set up. How you doing, DG? Hey, DPG, how are you? Good morning. So one of the things that is an ongoing life lesson and market lesson is patience, because we always feel like we should see something to do. And the wisdom is in knowing whether or not it's okay to sit on your hands and wait for things to clear. And you don't always have turning points happening every day, every week. So you have to be selective unless you just want to make your broker rich. And less is more. I know a lot of people feel that more is more, but really being selective in your trading choices and how your frequency of trading is also important. Your TF, your time frame is very important. So now let's get to something that I did see on Friday. And, you know, this has been a pretty nice move. It's been 1,000-point move in Nasdaq, but look at where it held. I mean, I've had this line drawn since, I don't know, March, you know, and look at how it filled out to that. And not just the wedge line, right? But also, if I pull up the weekly, you could see that there's a big megaphone formation here, right? And what happened was we had a throw over and we had a test that held. And here we are back down here testing both the wedge and the megaphone formation. This is the top part of the megaphone. This is the bottom part of the megaphone. This is just a speed line. It would activate it. Now, it may not. So you have to be flexible. I'm going to be patient and give it a chance with the risks that I'm going to give up gains and maybe even incur losses to see if this breakdown happens, because I do think there is a chance of a rally here in the market. But I think tech is going to, just like Friday, if you look at what happened Friday, the S&P was much stronger and the Dow was much stronger than the Nasdaq. So we'll see. I think it's going to become the relative weakness. You know, you're seeing Facebook stories on 60 Minutes. Maybe that's a, you know, counterintuitive buy when you appear on 60 Minutes. But I think that there still is a chance with everything that's going on in the world for this line to be violated. So that's my risk, that this turns out to be a major low and that we're heading up and we're, you know, back over 15.2. I guess you could hand it to people that this was just another correction, but it surely has a rounding top look to it. It's very oversold, and people would say, wow, the market's so oversold, you know, I should buy it. But, you know, it reminds me that markets that become overbought and you start top picking something because it's overbought, not because it's diverging, but it's overbought. That strong markets that become overbought tend to remain overbought for a lot longer than your wallet could take fading it. And so if it could happen that way on the upside, it could happen that way on the downside, where a market could become oversold. And I point towards the RSI. You know, these are some of the lowest readings we've had going all the way back to last spring, even lower readings. So of course you're going to get market rallies. I mean, this has been one of the most prolific bull markets in the history of mankind. So, I mean, you know, valuations are approaching or have taken out what happened in 2000. But I look at the next couple months as having some uncertainty. The market's going to have to, you know, fight whether or not there's a taper. Big number this week is going to be the NFP. But I will say one thing that could generate a new high and I'm going to give this the benefit of the doubt too and be patient, is that last week we talked about this breakout at 93.5, and we had a nice rally. It was a 100-point rally off the breakout. We still haven't had one retest. It would be more bullish if we held above the breakout, and it would be very bearish the dollar if this 93.50 gave way, and this was just month end strength. You get these flows month end that really aren't much about the market, but about book squaring and positioning, and you can have some false breakouts. So I'm aware that back under, say, few closes under 93.50 will not be constructive. So what am I going to do? Am I going to bottom pick the euro that's under an awful lot of resistance, the 1680 level? I'd like to see it back above that. I mean, the pound looked like it had a major breakdown right here, and we're right back to it. So, that could actually be, we have false breakdown under 36, went to 34. It was a good trade if you went with the breakdown. But what do you do now? So this is where I'm talking about patience. I don't know. Okay. I don't know what to do now in the currencies. I know what my bias is. My bias is that there could still be lower numbers in euro. And if anything, this may just be a little bear market rally back to some resistance. This is the pound, maybe back to 37. Euro has this resistance, 1750. It's failed from many times. If you want to look at 1750 and 22, that gives you 113 back towards this major channel line. So I'm not in the camp that this is the end of the dollar rally. I still think that there's a chance that we could be just pulling back before we make a move to 96. Okay, I don't think this was the top. I think we're going to consolidate or begin to move higher. I know some people looking for even higher numbers than 96, but 96 seems to be a confluence of a lot of different wave counts, and you could see what an important area 95, 96 was. That's a COVID low right there, 95, 96. And there's a COVID high. So I'm going to be patient and continue to look for dollar buying opportunities this week unless we start closing back under 97.5. So I'm just sitting here with a long bias in the dollar still. I don't think this ends it, but what I think doesn't matter. What the market does matters, and closes back under, another 27 points from here, and we start closing under 2 days, then I'll say the dollar rally's over and perhaps we're on our way back to 92. Everyone with me? Rich, DG, Mike, everyone? Okay, so that covers the dollars. This is important. And if you recall, the last couple of weeks I've been saying, I thought the yen would get a 3-drive formation, and that's what we have. Just because I draw a line doesn't always have to hit it, but the important thing is that it took out the prior high. So you do have a 3-drive formation. Can we rally again and make one more new high? And yields tell me that maybe that's possible. When I look at the yields after this big move, as long as they're holding, say, this 143 level, that this looks like a flagpole. Let's go with some real basic technical analysis. This looks like a pretty directional, impulsive move up to this 155 level from 130. The low is actually 113, but just say I use this as the measuring stick for what the next move could be. So in round numbers, you're talking about 56, 55 bips, 30 bips, excuse me, from 130 to 25 bips. So 25 bips over this breakout is going to get you to new highs. It's going to get you to 180, which is above these highs that we had last spring before we went into this long decline. So, we may just be flagging up here for a continuation move. I mean, this does look like a decent breakout, struggling. And, we had these two levels defined that you go with the range, and the breakout was about 136, 138. So we shouldn't get close to that. So to me, it looks like we're consolidating. Yields are heading higher. That means the dollar may continue to move higher as long as yields are. And maybe even the market does, except I think tech's going to have a lot more trouble with higher rates than cyclical stocks. So let's move on. One of the weaker currency rebounds so far has been, the Canadian still looks very weak. To me, this looks like, here's a classic technical formation in Canada. I think we're going to 22. Here's your head and shoulders top formation. Let's just do a horizontal line. Looks like we're getting a breakdown right here as we're live. So you could short it here, risking 100 pips or so, and go with this breakdown in Canada. Crude is continuing to go up. And just measuring this formation in Canada, I believe it'll take us to 22. So here's let's call it 26 and call it 29. Yeah. So at least 23 is a measured move. See how this could be a left shoulder, head, neckline, right shoulder breaking down here. So this argues for, maybe $80 crude. Maybe that's where we're heading right now. So looking at this market right here, Canada still looks weak. So if you want to play dollar weakness, Canada, this is where I talk about relative strength and trade selection. So here's a dollar making new highs right here on this date. Okay, so you're talking right there around the equinox, September, right? As the first day of fall, right there, it peaked on the first day of fall in the dollar. And then you look at Canada, and it peaked well before that and had a secondary high. While the dollar was making higher highs, Canada was making lower highs. Here, here was the high. Okay. So Canada has been relatively weak with the dollar making new highs. Swiss has been, relatively weak in comparison to the dollar too. But I think 96 is, still a valid case for the dollar. And now let's get to the gold, because, gold had a real nice rally with compression built up with all of this. And remember, I said you can't buy gold until the yen topped. Okay. So you see how when the yen came down that day is when gold turned. Do you believe in that correlation now? So if you're a yen trader, you could watch gold. If you're a gold trader, you should watch the yen. So if the yen is still heading lower, there's another wave to the upside in the gold. And I think it's going to be worth a shot, maybe down around here at 1736, and risk the lows for a continuation rally. Maybe we could get back up to 1830 or so, or at least 1780. So a trade from here to 1780 is a pretty good trade. You're talking about $45 potential upside, risking $16 on the downside. So I'll be watching that. Silver actually acting a little better, but this bothers me a little bit that, we bottomed here, but here's another trap that happened near the end of the month. Again, so I guess the lesson about month-end breakouts and breakdowns is to view them with a jaded eye and wait for the new calendar month to begin to see if it's just technical book squaring and money flows into month end, or it's a legitimate breakout or breakdown. I will view those happening at month end in that way. And this was just another example of it. Perhaps we could pull down in silver back towards, I'd look at this level right here, 2190, risk the lows. Maybe we develop some type of right shoulder here. The only other scenario would be a third drive, and that would be a new low under 21. And this would be drive 1, drive 2, drive 3. So the metals could go up. If the dollars can be down and gold could be down, which is happening today, gold could go up and the dollar could go down. So, you know, the linkage between gold and the dollar hasn't been that strong lately. It's more correlated to the yen and the safety trade. So if the yen's going to come off, that's because people are risk averse. And we are getting a decent break now in Nasdaq, and maybe we're going to close under this line right here. That's still my bet. Take a look at the VIX. It's trying. Here's the weekly, a daily. Here's the 4-hour. It's leaving a little gap up. You could see it failed from 25 last week. Through 25, we should get new highs for maybe at least a third drive up here. So that's the way the VIX looks to me. Here's your Russell. You know, Russell has been in a range forever. It's hard for me to believe that this is just consolidation before another move to the upside. It sure has taken a long time. If it happens, I think the first breakout's a fake out. Maybe that's what has to happen. You notice there were people rotating during the weakness. The last week was a weak week in the market, and people are starting to rotate into Russell, which is what I was talking about. Russell could do better in times of rising rates. They're more cyclical in nature than the mega cap tech, which their earnings are more affected by rates. As we move down the list, you know, gold stocks really didn't do anything spectacular with the gold move yet, but we did hit this line, wedge line I've had drawn in GDX. I wouldn't be short anymore, but I'm not quite ready to be long either. I'd like to see the GDX start to act better than gold. And here's, you know, here's gold. What looks better? Gold, GDX. And as Michael has said, and a lot of, you know, people with intermarket type of feels believe that the miners lead the bullion. And if that's the case, there's nothing that bullish in the miners yet. So that's my take there. Cryptos have had a nice run in the last week or so, but you know, perhaps we're, you know, maybe we're running our course here. I have heard that volume has been a bit weak in the last month or year-on-year comparisons, which is hard to believe with some of the moves we've had in Ethereum and everything. But you know, perhaps we get something like this. Let's try this trend line. You see this low. Yeah, you see this low. Okay. Perhaps we get some kind of pullback, that the correction off this rally is not complete yet. Maybe we get one more pullback towards 35, and here's Ethereum, probably has a similar setup here. If you believe the lows are in and you want to buy this stuff, this could be a, you know, a decent level to consider. So similar line in Bitcoin, that would take us down about $1,000 from where we are here. And then you're getting long at this again. It's patience. It's waiting for it, because right now you're saying, well, you know what, I missed it. I didn't buy it late last week, and I've got to be in. You know what? If it goes to 4,000 without me, it does. But I know what I would do down here. So that's my look at crypto. I only follow those two majors. And what do I want to wrap it with? So the beans took a hit last week. This is on my long-term shopping list. Remember, I said look for an October low. Well, we're in October now, so pay attention to any kind of divergences we're going to get. I don't think we have it happening yet. May try and turn here, but I haven't committed to long positions. They also have ETFs on the grains. They have soy, they have corn, they have wheat. And then, there's always, you could play the DBA, which is an ETF on everything, on agricultural. And look how strong the agricultural markets have been, despite some weakness that we've had in the grains recently. So DBA, I would wait for some type of correction. I don't chase. I'll let the market come to me. But I think being long agricultural commodities is going to be important because the Fed cannot print corn. But let's pay attention to this line in Nasdaq over the next couple of days, because I think we're pretty close to testing it again. There it is. There's your daily candle. And then if we get a breakdown, you don't want to see it close back above that line again. So even though some of my bearish friends have flipped, I plan to be patient. And now that the market's at such a critical juncture, especially the Nasdaq 100 and the S&Ps, which look better, they also got to a very critical juncture here. See this blue pivot line? So let's see if the market could hold and what's going to turn it. Is it going to be something fundamental? Is it going to be earnings? Is the Fed going to renege on the taper? Is it Congress is going to be able to get their act together and pass legislation? We'll see. Is China not a factor anymore in global markets when they're 20% of GDP? And you should take a look at Alibaba if you want to see a bear market. Take a look at that chart. And I hope you learned a few things, how to be patient, how to read markets. We see this signal in Canada's already working for 10, 15 pips. Take partial profits and tighten up your stop and only risk what you had there and see if this breakdown follows through. And let's see what happens with Nasdaq. And I'm going to be patient with getting bearish on the dollar unless we close under 93.5. I invite everyone who's watching this on YouTube, either live or the video, give it a like, open to comments, and would like to meet you. So bring your charts. Let's discuss what you're seeing. We have some great traders in here. There was a guy in here whose handle is gold that called the top and the end last week. He was warning about it before it happened. You guys watch Mike Venezia's videos. I noticed that more people are paying attention to Mike, and they have wisdom to pay attention to him. And he's going to keep you informed and about which sectors are performing. He's one of the best stock pickers I've met in my career. So I've been watching his analysis, and Mike was pretty much bullish all the way up. But also what I like about Mike is he'll take shorting opportunities when they're there. So, he has the flexibility to see both sides of the market and not afraid to trade the downside of a market. A lot of people are that trade stocks. They're long only type people. I like that you could take advantage of the market no matter where it's going. So everyone have a great day trading. I always leave you with don't just count your pips, count your blessings. And I'll see you tomorrow. And let's see if patience pays. And let's see what I missed today, tomorrow, and see if the picture clears up. But there's definitely some macro things to pay attention to. And I think October is going to be, you know, everyone thinks it's going to be too pat for there to be any problems in October. Maybe they're right. Maybe the problem's into Christmas. So these supply chain issues aren't going away. Just take a ride down our coast, go to LA or go to Oakland, go to any major port if you live on the ocean and see what's happening there. It's a parking lot, and not just in the ports, outside the ports. So everyone, that's a wrap. Good luck today. We'll see you tomorrow. And remember, come to our main chat room, share your ideas, collaborate, don't isolate. And you could do that all at tradegatehub.com. Adios.